people don't understand that for the vast majority of US investors, they can't go directly to Australia or directly into London or directly into Paris. It's too costly. They don't have the custody networks. And so, in order to tap into that investment opportunity, companies need to make those shares available in the US during US trading hours in US dollar on a regulated market so that investors can access those equities through their broker of choice.
For many ASX-listed companies, gaining fresh capital from US investors can be a little rough, often seen as complex, costly, or even out of reach. But there are more efficient pathways to tap into the market. Joining me in the studio is Jason Paltrowitz, Executive Vice President of OTC Markets Group, whose primary role is helping international companies gain exposure and access to US investors. Jason, good to see you again.
Good to see you. Thanks for having me.
It's a pleasure. Now, before we begin and get into the nitty-gritty details, can you give us, in a nutshell, what OTC Markets is and how it operates?
Sure. Actually, we're the largest stock market in the US for non-US equities. So we act as a secondary market for companies that are listed all over the world, whether it's the ASX, Euronext, London Stock Exchange. We give them the ability to use their home market disclosure to kind of passport into the US and trade on a fully regulated stock market so that they can access US investors and provide secondary liquidity from the breadth and depth of the US market.
And I just want to look at OTCQX compared with OTCQB. Can you talk us through the difference in structure, rules, etc.?
Sure. So OTCQX is our top market. We call it the best market. Companies there like CSL or Fortescue out of Australia, they meet a much higher financial standard. OTCQB is our venture market. So that's where you'll find a lot of the early stage growth, mining, resource exploration companies, some pre-revenue out of Australia will trade there. If you equate it to the Canadian markets, it's kind of like the difference between TSX and TSXV.
And you're continuing to build momentum in Asia and Asia Pacific. What does tapping into this particular market mean for the OTC?
Well, for us, certainly US investors, and we've seen this kind of dating back to the beginning of last year, where US investors were cycling out of US equities, and we've seen tremendous growth into Asian and European equities. And so for us to be able to help those companies tap the US investor is really important. We're seeing tremendous growth from around the world as issuers actually see that opportunity as well. I think a lot of people don't understand that for the vast majority of US investors, they can't go directly to Australia or directly into London or directly into Paris. It's too costly. They don't have the custody networks. And so, in order to tap into that investment opportunity, companies need to make those shares available in the US during US trading hours in US dollar on a regulated market so that investors can access those equities through their broker of choice.
And I guess that's now why ASX companies are looking more and more into that dual listing.
Yeah, we have a tremendous pipeline out of Australia. We're over 80 companies have chosen either our QX or our QB markets, and that continues to grow. That's why I'm here. Those numbers continue to grow, and the opportunities, like I said, continue to grow. I'll say it again.
So part of all of this is the OTC's strategy, list local, trade global. Can you walk us through what that means and how it benefits companies outside the ASX, particularly with the the US, and particularly with those in Australia?
So yeah, we're a secondary market, right? So companies cannot do a full capital raise on our market in the US. And we take the position that if you're an Australian company or a Chinese company or a French company, you should list in your home market. You should wave the national flag and you should be a proud national champion. And we understand that there's still this desire, however, to be able to tap into US investors. It helps with secondary market liquidity. It helps to bridge the valuation gap. There are any number of reasons why you want US investors, but that doesn't necessarily mean you should be listed on one of our primary exchanges, the New York Stock Exchange or NASDAQ. So List Local, Trade Global kind of provides investors the ability to get access to international equities. It gives companies the ability to access those investors. And the third benefit is it actually helps the local exchanges keep listings. Wherever you go around the world, whether it's ASX or Euronext or London, they're fighting with companies that are thinking, well, we should just go to the New York Stock Exchange or NASDAQ. We take the approach that you shouldn't. It's less risk, less cost, less complex to do your IPO locally, but you can still have all that benefit of a U.S. secondary market.
Yeah. And OTC markets the growth trajectory is pretty large now. You've been doing really well on that front. What are the trends that you're seeing? What's behind this trajectory? What are the trends that you're seeing, particularly when it comes to international interest?
Well, again, we're seeing a tremendous amount of U.S. investment interest in non-U.S. equities. So if you look at the first quarter of this year compared to the first quarter of last year, dollar volume in Asian equities is up 77%. Dollar volume in European equities is up 72%. So there's this huge cycling out of U.S. equities into international equities. And so that's a tremendous opportunity for us, right? We operate the market. So you're seeing trading volumes and volatility contributing to the growth of the market. We also launched about 4 or 5 months ago overnight trading. Kind of the new trend in the news is 24/7. So we're not fully 24/7, but we're one of only 2 providers now that are giving Asian investors the ability to tap into U.S. securities in Asian hours. So between us and the other provider, we're the only 2 that give that opportunity. And then we're the only ones that actually, not just U.S. exchange listed companies, but you can then overlay on top of that the international aspect of it. So Asian investors can now come into the U.S. during their trading hours and buy the likes of Roche, Adidas, Heineken on our market in U.S. dollars in one place. And so that is also contributing significantly to the growth trajectory.
And speaking of launches, in July, you're going to launch the OTC ID. What's behind that?
OTC ID is really, behind that is the regulators and the investors that want to make sure that the companies that trade on our platform are providing a basic level of disclosure. And so historically, you had companies that trade on what was called our pink current market, especially in Australia, that were not engaged, that weren't actually taking ownership of the information that was flowing through into the US. Going forward, we'll be discontinuing the pink current market, and OTC ID will give companies the ability, if they don't qualify for our QB or QX market, we'll still give them the ability to make sure that they're putting in their disclosure, that they're certifying that the information that U.S. investors see is accurate, timely, and kind of has their kind of stamp on it, and that it's not just information that's old, outdated, or stale.
Just a couple more questions, Jason. Misconceptions about the OTC and Australian companies moving into that. What are they?
Well, I think misperceptions of our market is that we're somehow some unregulated, wild west market. I think it's important that everybody understands we are a fully regulated SEC and FINRA regulated, what's called super ATS. So we are a stock market, fully electronic, that reaches all the same U.S. investors and market makers that are making markets on all of the U.S. exchanges. So Citadel, Virtu, Jane Street, all are tapping into our market like they would New York Stock Exchange and NASDAQ to create liquidity and to support U.S. investor interest. I think the other misperception is that if you're trading in the U.S., that you somehow there's a lot of cost and complexity that goes with that cross trade. That's our unique value proposition. So for Australian issuers listed on the ASX, they don't need to do anything additional from an SEC reporting, from a reconciliation to US GAAP. They don't have to be Sarbanes-Oxley compliant. They can simply make available to us all the disclosure that they're already providing to the ASX, and that gives them the ability to trade on our platform. And so there's no additional regulatory burden that you would have if you were to do, like I said, a cross-listing on one of our other exchanges in the US.
And just finally, Jason, you're a known advocate for small cap startups, entrepreneurs, etc. Can you talk me through the success story that's most sort of taken your interest?
The success story from a company perspective, or?
Yeah, from a company perspective.
I don't know. There's so many. We had a small Japanese company that recently joined our QX market, and it's in the digital asset space. And last week I was told, I was in Asia last week, so I wasn't in the office, but I got an email that it was our third most actively traded security. And so I think what always interests me, and I think when I speak to issuers, is that I'm not that smart. So I don't necessarily know what's going to trade well or what's going to like pique in investors' interest. It's important to, somebody told me a long time ago, stocks are sold, they're not bought. And so for companies that are public, it's really important that they provide a market for their securities and that they support their listing through investor relations and other activities. And you'd be surprised. You get a company out of nowhere that all of a sudden somebody takes an interest in, and it's our third most actively traded.
Yeah, Jason, good luck and yeah, happy travels with the rest of your time over here. But thanks for your time today.
Thank you. I appreciate the opportunity.